All right, fellow meme stockholders, XMAX Trading here. Just want to go over the latest DD on AMC. Some pretty shocking articles came out, which I thought were really important. So if you haven't subscribed to the channel, consider subscribing, hit the like button, and let's get started. So AMC, another short squeeze, is coming soon by Seeking Alpha, of all places. So this is kind of a bombshell article. They're coming out and saying this could happen. Not like the other FUD articles trying to get you out. So AMC posted strong Q1 earnings, improvements in revenue, EBITDA, and theater traffic. The theater recently disclosed a 6.8% stake in National Cinema Media, which provides pre-movie advertising and marketing in theaters. They're really cornering the market on movie theaters and everything around it. AMC's short interest is at 21% and could trigger a massive short squeeze as institutions and hedge funds are buying up the stock. Pretty amazing stuff. AMC is well known for its role in the GameStop short squeeze of 2021, where retail investors gathered on Wall Street bets to send meme stocks to the moon. Savvy investors are targeting companies with high short interest to trigger a short squeeze on the short sellers and a gamma squeeze in the options market. However, meme stocks often fall as fast as they rise, and now AMC is currently down 52% year to date. The company recently posted its Q1 earnings report with some interesting info about the positive rebound in movie theater traffic. What's more interesting is that AMC's short interest remains high, and now institutions are trying to buy up the stock left and right. Not financial advice, just reading from the article. Could be the beginning of another short squeeze, and another epic short squeeze in 2022. So AMC's strong Q1 results, $785 million in Q1 revenue, up 500%, while net losses hit $337 million, up year over year, so a little bit more net losses. Adjusted EBITDA improved by $223 million to only a loss of $61.7 million. They're talking about being cash flow positive by end of year, which is amazing. The company would really get out of the hole by then. Overall theater attendance exceeded 39 million viewers per quarter during the quarter, and the average number of screens reached over 10 million. AMC, several key movies, really hit the number. Spider-Man, The Batman, Sonic the Hedgehog, and most recently Doctor Strange. So as of 5/25, Doctor Strange is almost 800 million worldwide, so it's pretty amazing. The company, AMC, has a strong catalog of movie releases through the rest of 2022, including Top Gun Maverick, Jurassic World Dominion, Lightyear, the Disney movie, Thor, Minions, Black Panther, and highly anticipated Avatar 2. It looks like AMC has survived the toughest periods of the pandemic and could exceed Wall Street's expectations with such an impressive catalog of future releases coming up. Also, the company's made several key changes by accepting crypto, such as Bitcoin, acquiring 10 new theaters, and using laser projectors, investing $28 million in Highcroft Mining, and most recently purchasing a stake in National Cinema. AMC's impressive performance has caught the attention of several high-profile Wall Street institutions who have either opened a new position in AMC or increased their stake. So Ray Dalio purchased 21,000 AMC shares and sold Tesla. According to Fintel, Goldman Sachs increased its stake in AMC by 36% to just over 3 million shares. Lots of institutional investors have bought AMC over the last few weeks, which have triggered epic short squeeze leading up to the summer of 2022. High short interest could cause another short squeeze. AMC is a prime candidate for another potential short squeeze due to its high short interest and number of shares on loan. According to Ortex, AMC has 20% short interest, 150 million shares on loan. Short sellers borrow shares and then sell them back to cause the price of security fall. The goal is to buy the shares back and pocket the difference. However, it appears that though institutions and retail noticed a high short interest and started buying AMC around $10 per share. These retail sellers must return their shares by buying back the stock, which could cause the price to soar in a hurry. Risk factors, it's unlikely, in their opinion, not financial advice, AMC will not squeeze at such an aggressive pace this time around because retail stock trading activity is much longer in 2022 when compared to last year. Markets are down. I don't expect AMC shares to reach $60 again, and that's his opinion. But I believe $30 is a strong possibility in the next couple of weeks. AMC stock could 2x or 3x from here, providing even larger gains for call option buyers. I think most retail people, not financial advice, say buy stock, not options, because options are maybe fueling the manipulation because it goes straight to Citadel. Another risk factor is the stock market hasn't bottomed yet. Future Fed rate hikes could send the stocks plummeting lower. I do this is already priced, plus billionaires are buying these stocks at current price levels. Would billionaires start buying stocks aggressively if they believe prices will crash even lower? My guess is not. Conclusion, AMC is one of my favorite meme stocks to trade because you can make quick gains in a hurry. GameStop is another short squeeze candidate, but GME stock trades around $100, make it more expensive to buy long shares and call options. That's a good point. If you're looking for some quick profits during a quick current market reversal, I believe AMC stock is worth a serious look. And they have a long position AMC. 160 comments. Uh-oh. These people are all attacking. They're all attacking this article. So, from Frank Nez, pressure, May 24th, pressure escalates on AMC shares on loan skyrocket. AMC shares on loan continue to hit all-time high. Shareholders are patiently wait for the bull pressure to send AMC shares priced to new all-time highs this year. Last year, the stock reached an incredible $72 per share, squeezing only a very small percentage of short sellers. That's pretty amazing. I like Frank Nez. He's a pretty cool article. Today, there are more short sellers playing a risky bet than there were last year. The data in this article is the same data that shows AMC would surge when it did $20 in January and $72 in June. Let's discuss it. All right, let's discuss it. History is about to repeat itself. What caused AMC to surge to $20 per share in January of last year? What caused it to short to 72 in June? It's not such a matter of what, but why. Why did AMC have these run-ups? The answer is because of AMC's short interest. Like GameStop, retail investors notice AMC had high short interest. It's not just high short, but people are passionate about the movies and American companies. They don't want them to be destroyed by short sellers, you know. High short interest means retail has a chance to squeeze the shorts, not financial advice, from their positions by driving the stock up through big buying pressure. Shorts make their profit as stocks go down. If the price of stock is driven up, the profits would eventually turn to losses. So some short sellers close positions and leave the risky bet, but many stay behind, holding, waiting for AMC and GameStop to drop to pandemic levels to make their money back. The market has experienced nothing but bear rallies all this year. I think short sellers are going to take advantage of the market by finally closing position. But wait, let's go over the data first. So why is AMC going up? AMC is going up again because the shares on loan are all-time high. These shares on loan eventually have to be returned to the lender by buying back the stock in the lit market, the NYSE. The massive buying pressure is going to create a high demand for the stock. As demand for the security goes up, so does the cost to buy it, the value of the security. I didn't know that. When AMC surged to 72, it had roughly just over 100 million shares on loan and a short interest of 24% before falling to 20% and then 14%. Today, AMC shares on loan have hit 163 million. Short interest of 22%. So, he has an updated short interest. Let's look at this. Ortex cost $89. So BBIG, cost to borrow, shorts, shares on loan, days to cover, SNDL, Sends, Clove, AMC short interest, updated daily. Utilization is 100%, so all the shares available to shorting are being used. Cost to borrow 2.14. Short interest is 22%. Shares on loan, days to cover 3.38. Short sellers owe their lenders more now than they did when AMC shopped the $72 last June. They owe their lenders more. No matter what the catalyst is, the AMC is never going to surge again. and you can bet it's going to be a lot higher than the previous $72 per share. Not financial advice. So here's what's happening in June. Something big is happening in June. Like all news, we take it with a grain of salt, but it's exciting. Executive Order 14,032 was responsible for prohibiting use of Chinese securities as collateral during the times AMC ran up. That propped up margin calls. This propped up the margin calls because of large exposure to financial institutions have to Chinese securities. So they propped up the margin calls supposedly on Chinese securities. When these securities are no longer accepted as collateral on January 27, 2021, AMC stock surged. The order was shortly moved to May 27th, where AMC had a second surge of 72. Executive order goes into effect, for sure, hopefully, June 2nd. It's very possible we see something big happen the first week of June. Difference this time is over 70 Chinese securities are being affected compared to last year's 30. A big collateral haircut means more liquidity will be needed to keep up the margin requirements. This is why we're seeing a massive sell-off in the market today. Institutions need liquidity to keep up with margin requirements. And they're in a tough situation because share prices keep dropping. DTCC keeps raising the margins. Collateral haircut. No liquidity and margin calls. It's a recipe for disaster. What's going to end up happening, financial institutions are going to have to close their shorts and heavily shorted stock. This could be their last resort for liquidity if profitable. Otherwise, it's possible we begin to see hedge funds cut their losses and shut down, as we've seen in Melbourne Capital and Anchorage. Hedge funds are in a whole world of pain right now. Ken Griffin said retail investors wiped up the pension plans of teachers. I saw that. And Gabe Plotkin announced Melbourne was shutting down. I wonder what he will say next. As always, take this information with a grain of salt. A lot is happening in the market. Only time will tell where AMC and GameStop go next. So pretty amazing stuff. We'll see what happens in June. Not financial advice. Keep our fingers crossed, and a lot of people just keep holding. So, all right, guys. So next video. Talk to you later. Bye.